This TradingView indicator alone has a win rate of over 85% on Bitcoin, according to my research. All these winning trades you see on the screen were possible because of this tool. Not only does it have a high win rate, but it's also very easy to use. With just a few rules in place, you can open trades and profit almost every time. It works best on a 15-minute chart. By the end of this short tutorial, you'll be fully equipped to start trading with this amazing technique and make consistent profits. Traders, if you find value in my content, please like this video and subscribe to TradingView. On this channel, I teach the latest and most effective trading strategies in the simplest way possible. Without wasting any time, let's begin the tutorial. First off, let me demonstrate how to add this indicator to the chart. Simply open any chart on TradingView and click on the indicators. Search for Liquidity Concepts by Hunter Algo. This is hands down one of the best liquidity indicators I've ever tested. At first, the indicator might seem too complex, but don't worry. I'll walk you through everything you need to know about this tool so you can easily identify profitable trade opportunities. The Liquidity Concepts indicator is supported by a market structure detector and pivot points to identify resting liquidity and stop-loss levels. The pivots, or in other words, lines plotted by this indicator on the chart, are based on market highs and lows. These highs and lows represent the market structure and are marked as HH, which stands for higher high, HL, which is higher low, LH, lower high, and LL, lower low. When price breaks above the higher high for the first time, the indicator marks it as a change of character. A bullish change of character signals that buyers are now in control. This is when the candle color switches from red to green. When the higher high gets broken for the second time, a break in the market structure occurs. Exactly the opposite is true when sentiment shifts from bullish to bearish. The most important feature of this indicator is the liquidity grab. A liquidity grab or a stop-loss hunt is when retail traders place their stop-loss orders at recent highs or lows. This is a spot where big players attempt to push the market to trigger all the stop-loss orders and gain a better entry in their favor. The indicator highlights buyers and sellers' liquidity grabs in green and purple backgrounds. Liquidity grabs usually happen near support and resistance levels. A bearish liquidity grab occurs when price breaks above the recent swing high and immediately falls down. A candlestick with a large upper wick is formed. A bullish liquidity grab, on the other hand, takes place when price breaks below the recent swing low and immediately rises back up. A candlestick with a large lower wick forms when this happens. Let me demonstrate a quick example of how it looks in practice. Let's assume your strategy gives you a signal to take a short trade right here, since the price is near resistance. You open a position and set your stop loss at the recent swing high. Let's also suppose that most retail traders do the same. Now we have a large number of buy stop orders sitting around this price. Big institutions are aware of this, so they proceed to grab the liquidity, in other words, execute those buy orders with a goal to get a better entry price for their sell orders. When all stop losses are triggered, market makers take the price where it was initially supposed to go. In order to avoid this trap, we must be aware of these liquidity grabs and act on them accordingly. Therefore, we have this amazing indicator on the chart that lets us spot these manipulations we would otherwise miss. Based on what we've learned, how can we use this indicator in live trading? Hold on tight, because I'm about to reveal my exact strategy. Before we proceed, if you're tired of losing trades and looking for proven tools with a high win ratio, Easy Algo is your best choice. They offer the two most advanced technical analysis indicators that will make you a market expert. In addition, you will get access to a VIP Discord community where you can chat, get support, copy other traders' signals, and learn trading skills 10 times faster. Hundreds of traders make consistent profits with Easy Algo. You can be one of them. Click the first link in the description and secure your spot today. Let's start with the conditions for a long trade. First off, ensure that the overall sentiment is bullish. This is super important. Your goal is not to trade reversals, but rather to go with the prevailing trend. That's why checking the candlestick's color should be step number 1. Next, Spot a bullish liquidity swipe. I'm talking about candlesticks with a green or gray background. All bearish liquidity swipes with a purple background should be ignored. The idea behind this strategy is not to enter a trade when a liquidity grab happens, as this could be quite risky. The strategy is to open a trade when the market returns to the price where the liquidity grab occurred. We should also look for buying pressure before initiating a trade. A reversal pattern like bullish engulfing will do. If you don't like price patterns, you can use the stochastic RSI instead. It should become oversold when retracement happens. The moment it leaves the oversold zone, you open a trade. Both methods work very well. The strategy's money management is simple. Set the stop loss a couple of pips below the liquidity swipe and aim for 2 times the risk. In the next example, I want you to decide if a buy signal is valid. Pay close attention to the price action. So, can we take a long position here? If your answer is yes, you're correct. Every condition for a long setup we discussed previously was met. My next question is, where do we place our stop loss? Correct, a couple of pips below the liquidity swipe. Let's see if this trade is a winner. Alright, now let's learn the rules for a short trade. First, make sure you sell only after a bearish character change, hence the candle bars should be red. Second, wait for a bearish liquidity swipe. The area is either gray or purple. After a bearish liquidity take, the price usually drops. Do not open a short trade yet. Wait for this zone to be retested first. Open a trade if a market shows signs of selling pressure. Use an engulfing candlestick pattern or the stochastic RSI. Set the stop loss slightly above the liquidity take and target 2 times the risk. Now let's use your knowledge in practice. In the following example, I want you to decide whether the sell signal is approved. So, what do you say? Can we sell the security here? If you've been paying close attention, your answer should be yes. The setup is indeed valid. Every condition is met. Traders, now you have a huge advantage over other players. Use this strategy wisely, but make sure you backtest and forward test it with paper money. Thanks for watching. Till next time.